If you receive Social Security right now, there is at least one bill in your monthly budget that the federal government is legally required to cover for you. Not partially, not with a coupon or a percentage discount, entirely, paid directly to the provider on your behalf before you ever see the charge. And the reason you're still paying it isn't because you don't qualify, it's because no one told you the program exists, and the agency that runs it has no legal obligation to tell you. Today, I'm going to give you 5 specific bills, the exact programs that eliminate them, the income thresholds that determine eligibility, and the precise step, one step for each, that you need to take this week to stop paying them. Because information without action doesn't save you a single dollar. Let's start with the one that costs most Social Security recipients the most money every single month without them ever questioning it. Bill number 1 is your Medicare Part B premium. In 2026, that amount is $185 per month. It gets pulled automatically from your Social Security payment before the deposit ever reaches your bank account. Most people see a smaller number in their account and accept it as the cost of having Medicare. They never question it. They never look into whether it has to be that way. What they don't know is that there is a category of federal programs called Medicare Savings Programs, administered through your state's Medicaid office, that will pay that $185 for you completely, every single month, with no out-of-pocket cost to you. There are 3 tiers. The most comprehensive is called QMB, which stands for Qualified Medicare Beneficiary. QMB doesn't just eliminate the $185 Part B premium, it covers your Medicare deductibles, your co-payments, and your co-insurance. Everything Medicare would normally ask you to pay out of pocket goes away. If you are a single person with monthly income under approximately $1,350, or a married couple with combined income under $1,824, you likely qualify for QMB right now. If your income is slightly higher, up to around $1,816 per month as a single person, there are 2 additional programs called SLMB and QI that will, at minimum, eliminate the $185 monthly charge entirely. The math on this is straightforward. $185 per month eliminated equals $2,220 back in your pocket every year. For someone who has been on Medicare for 5 years without this program, that's $11,100 that went to a premium you were entitled to have covered. The program was always there. The eligibility was always there. The application was never filed because nobody sent you the form. To apply, call 1-800-MEDICARE or go to medicare.gov to find your state's Medicaid office. You will need to provide income and asset information. The process takes 1 appointment in most states. The savings begin the following month. Bill number 2 is your prescription drug costs. A lot of people on Medicare Part D assume that having drug coverage means their costs are under control. Covered and affordable are 2 very different things. There is a federal program called Extra Help, also known as the Low Income Subsidy, and if you qualify for it, your prescription situation changes completely. No Part D premium, no annual deductible, and the absolute maximum you pay for any covered medication in 2026 is $5.10 for a generic drug or $12.65 for a brand name. That is not the average, that is the ceiling. The most you will ever pay per prescription regardless of what the drug actually costs. Compare that to what seniors without this program are paying. $50, $80, sometimes over $100 per month for a single medication. For someone taking 4 or 5 prescriptions regularly, the annual difference between having extra help and not having it can be several $1,000s. That gap exists not because the program isn't available to them, but because they don't know it is. The income threshold for extra help in 2026 is approximately $23,940 per year for a single person, which is roughly $2,000 per month. For a married couple, the threshold is approximately $32,260. Assets also factor into eligibility, but the limits are more generous than most people expect. If you are not sure whether you qualify, apply anyway. The SSA reviews your situation and tells you, The only cost of applying and not qualifying is 15 minutes of your time. Here's the shortcut that most people never hear. If you were already approved for any of the Medicare savings programs I just described, you are automatically enrolled in Extra Help. No separate application, no additional paperwork. The enrollment happens on its own. If you haven't applied for either yet, go to ssa.gov or call 1-800-772-1213 to start both at the same time. Bill number 3 is your energy bill. Heating and cooling costs in 2026 are genuinely significant. Home heating costs are up nearly 9% over last year. Electricity is up over 12% in many parts of the country. For anyone living on a fixed Social Security income, that increase isn't an inconvenience. It's a real and recurring financial hit that compounds month after month through every season. What most seniors don't know is that there is a federal program called LIHEAP, the Low Income Home Energy Assistance Program, that pays your utility company directly on your behalf. Not a percentage off your bill, not a credit applied next month, an actual payment made from the federal program to your gas company or electric provider, so that charge doesn't appear on your bill at all. The income threshold varies by state, but if you are a single person with annual income around $22,000 or below, there is a strong likelihood you qualify. If your income is somewhat higher, your state may still have programs that cover partial costs. Here is what matters specifically for seniors. If you are 60 or older, you receive priority access in most states. You can apply a full month before the general public enrollment opens. That matters because LIHEAP operates on first-come, first-served funding. When the annual allocation runs out, it is gone until the next funding cycle. Seniors who wait until the general enrollment period frequently find the program closed. Seniors who know about priority access apply first and secure their benefit for the year. There is also a connected program called the Weatherization Assistance Program. This program sends a qualified contractor to your home to assess insulation, seal drafts, and repair or replace heating and cooling equipment. No cost to you. The result is a permanent reduction in your energy costs, not just 1 month of assistance, but lower bills for as long as you live in that home. To find your local LIHEAP office and determine your state's specific income limits and enrollment dates, dial 211. That is the National Social Services Information Line. Tell them you are 60 or older and looking for energy assistance. They will direct you to exactly where you need to apply. Bill number 4 is one that catches people off guard because most seniors have never heard the name of it. It's called IRMAA, which stands for Income-Related Monthly Adjustment Amount. If your income in a prior year exceeded $106,000 as a single filer or $212,000 as a married couple filing jointly, Medicare does not charge you the standard $185 rate. It charges you a surcharge. In 2026, that surcharge ranges from $284 to $689 per month on Part B alone, deducted automatically from your Social Security before you ever see the deposit. On top of that, there is a separate IRMAA surcharge on your Part D drug coverage. For seniors at the highest income tier, the combined IRMAA surcharge can reach over $800 per month in additional Medicare costs. Most people who are paying this surcharge see a smaller Social Security deposit and assume that's simply how Medicare works at their income level. What they don't know is that there is a formal appeal process specifically designed for retirees, and that process eliminates or substantially reduces the surcharge for a large percentage of the people who use it. Here is why this matters so much for recent retirees. Medicare uses your tax return from 2 years ago to determine your IRMAA surcharge. That means if you retired last year, or sold a property, or did a Roth IRA conversion, or had any kind of one-time income event that temporarily elevated your earnings 2 years ago, you are being charged a surcharge in 2026 based on money you no longer have and income you no longer earn. Your actual retirement income may be 50 or 60% lower than the number Medicare is using to calculate what you owe. The fix is a form called SSA 44. It is a Medicare income-related monthly adjustment amount life-changing event form, and it exists for exactly this situation. You fill out the form, attach documentation showing what your income actually looks like now, and request that Medicare recalculate your surcharge based on your current income rather than your 2-year-old tax return. The qualifying life-changing events include retirement or reduction in work hours, loss of income-producing property, death of a spouse, divorce, and settlement of an employer pension. People who file SSA 44 after retiring frequently have their surcharge reduced or eliminated entirely within the same year. The monthly savings are immediate once the appeal is approved. Someone paying $450 per month in IRMAA surcharge who successfully appeals recovers $5,400 per year. That recovery happens every year going forward as long as their income stays below the threshold. You can download SSA 44 directly at ssa.gov or pick it up at any Social Security Administration office. You do not need an attorney or a financial advisor to file it. You need the form, your most recent tax return, and documentation of the life-changing event that changed your income. One filing, potentially thousands of dollars per year back in your Social Security deposit. Bill number 5 is the one that surprises people the most, including seniors who already know about the first 4. It is your property tax bill. If you own your home and you are 65 or older, there is almost certainly a property tax exemption, freeze, or credit available in your county that would reduce what you pay every year and that you have never claimed because the county never told you it existed. Nearly every state in the country has at least one senior property tax relief program. The most common are senior homestead exemptions that reduce the assessed value of your home, which directly reduces the tax calculated on it. Many states also offer senior freezes that cap the taxable value of your home at its current level, preventing it from increasing year over year, regardless of what happens to property values in your area. Some states have circuit breaker credits that limit your property tax as a percentage of your income so that the bill can never exceed what is proportional to what you actually earn. And a smaller number of states offer senior deferrals, where the tax accrues but is not collected until the home is sold, essentially giving you a zero-interest loan secured by your property. The savings range from a few $100s per year in lower value markets to several $1,000s in states with higher property values and higher tax rates. In states like Florida, Texas, New York, New Jersey, and California, senior exemptions and freezes can represent meaningful annual savings that compound over the years you remain in your home. Here's the part that should be frustrating when you hear it. Your county assessor knows when you turn 65. That information is in the public record. Your date of birth is connected to your property ownership in the county database. The county has the information it would need to automatically apply your exemption. In most counties, it chooses not to. Instead, it waits for you to apply. The exemption is not retroactive in most states, which means every year that passes without an application is a year of overpayment you cannot recover. The step to take is a single search and a single phone call or online application. Search your county name followed by the words Senior Property Tax Exemption 2026. What comes up will show you what programs exist, what the age and income requirements are, and how to apply. Alternatively, call your county assessor's office directly and ask one question. What property tax relief programs are available for homeowners over 65 in this county? That question takes 30 seconds to ask. The answer determines whether you save hundreds or thousands of dollars every year for as long as you own your home. Now let me bring all 5 together with a specific action for each, because the only thing that separates you from these savings is one step per bill. This week, if your monthly Social Security income is under $1,350 as a single person or $1,824 as a couple, go to Medicare.gov today and locate your state Medicaid office. Call them and tell them you want to apply for Medicare savings programs. That one call begins the process of eliminating your $185 Part B premium. If you take prescription medications and your annual income is under $24,000, go to ssa.gov and apply for extra help. If you are already enrolled in a Medicare savings program, you are automatically enrolled. If you are not sure, apply. The review is free and the potential savings are immediate. Dial 211 this week and ask about LIHEAP energy assistance in your area. Tell them you are over 60 and ask specifically about the senior priority enrollment period. Get the date and apply on the first day it opens. If you are receiving a Social Security deposit that seems lower than it should be, and you know your income 2 years ago was elevated by a one-time event, download SSA 44 from ssa.gov and bring it to your nearest Social Security office or a tax preparer who works with retirees. The appeal process is straightforward, and the recovery is retroactive to the start of the year in many cases. And before the end of this month, search your county name and senior property tax exemption and make one call to confirm whether your exemption is currently applied to your property. If it is not, apply. If you are not sure, call the assessor's office and ask. One conversation, savings that repeat every year. These 5 programs were not created recently. They have existed for years, in some cases decades. The reason millions of Social Security recipients are still paying these bills in full is not that they don't qualify. It is that the agencies administering these programs have no legal obligation to tell you that you do. The notification system is not a system. It is a silence that costs American seniors billions of dollars every year in benefits they earned, qualify for, and simply never claimed. You now know all 5. The step for each one is in front of you. The only thing left is whether you take it before next month's bills arrive or after.